Well, hello everyone. K Kim here from the Traders Club, and thank you for tuning in. And we did see a lot of weakness last few weeks here. Sharp decline we've seen here, and there's a lot of people looking at this head and shoulders on the S&P 500 with the recent confirmation breaking below the neckline here as well, and at the same time we have broken below the 100 SMA. That 100 SMA has been acting as strong support for some time now. You can see that 100 SMA been a strong support for how long now? Since the really mid 2013 here. You can see that here we continue to act as support, and then we have broken below that 100 SMA support. Well, you know what though, I wouldn't put too much weight on that as of now, for the fact that the 100 SMA has been broken before. We broke 100 SMA, we broke and 200 SMA at the same time back in end of 2014, October 2014, and this market continued higher. At the same time, back in October 2014, we actually put in lower low at the same time, breaking below this low here, and then we just V-shaped higher back in October 2014. So at this point, yes, we did break below the 100 SMA, and that's a concerning in the minor term, obviously. And I don't think that just because we broken below 100 SMA here, 100-day moving average, simple moving, as that's what I'm referring to when I say SMA. I don't think, just because we broken below 100 SMA, this is a time we start freaking out that this market is going to completely crash. And in the minor term though, minor to intermediate term, there's a little bit of caution I have to give the bears that, or the buyers, that there's a little bit of caution that we do have a head and shoulder formation confirmed. But we do have some sort of a topping pattern. Again, these, what I call minor term topping pattern breaking below the neckline in the past. You can see that this is, you can look at this as kind of a triple top. Again, that scale that we've seen back in early 2014, February or March, it took about 2 months to cultivate here. This triple top minor term topping pattern, again, minor term, I'm not talking about that. It's a major topping pattern. So minor term topping pattern that has confirmed here. And then what happened was we came down to about 100 SMA, and this thing just rallied back. And once we gotten above, this level right here, this is a pivot level. That's when the, nullification process, a repudiation process of this topping pattern, minor term topping pattern has commenced. And once we start shaking, bang up and down, this market continued on higher. So I'm not saying that that's exactly what's going to happen here. What I'm saying is, because we're dealing with this kind of characteristic of market, we're dealing with prolonged uptrend. This isn't where this is not the place or time that I would start to freak out and start to think that just because we have head and shoulder formation. It took, I think, let's see here. So it took about, this is a 3 months cultivation. And obviously, many times, if you want to see a primary major term topping pattern, you would want to see at least 8 months to a year, especially we're dealing with this prolonged uptrend. 3 months of cultivation, it's, if anything, that could get us to maybe somewhere down here. But anyway, so we got to the neckline here. We're broken below the neckline. We came down. We're going back up. We did find support at 200 SMA, 200 moving average, which we did act as support back here. So we found that 200 SMA there, and then we are bounced back up last few days. The biggest question that we can ask in the minor term is that, are we getting back up to retest this level and then, making this level as a new resistance, right? This was support, and then possibly becoming new resistance and falling over. Once it does it, once you get rejected at this level and then break below this low, this is where I think the buyers should be concerned in the minor to intermediate term. But what else you could see is this might get rejected here, and then we form a double bottom and then get up, where we get, double bottom here. And then once we get above about 210-ish on the spider, okay, 210-ish on the spider. If we can get above and start hanging out above 210, that's what I like to say the nullification process has started. That's when I would say the repudiation, repudiating what, nullifying this head and shoulder formation. So there's a lot to think about here. So obviously we need substantiation from the price action. So we don't have enough price action to conclude that what's going to happen. So what I have to say is that we have to watch this very, very carefully here. Anything above 210, we could see this market resuming to the upside, and we are right at that neckline area here of the head and shoulder formation, and we also working with the gap. So it's a little bit complicated matters that we're dealing with buyers here, because a lot of times when you're dealing with this gap here, things can get hectic. What we can do is that this thing might thrust straight through this pivot level, but we might get to that gap fill, and then when the gap gets filled, it may become resistance. So then this might fall back over. The biggest question when it falls over is that the 200-day moving average, is that going to act as support again and then get back up, thus creating this double bottom, and when it gets back above 210, started nullifying this head and shoulder formation? Or are we going to get up and then roll over and create a lower low and creating lower highs? Once we start to create lower highs like this and lower lows, that's a downtrend. Not in a primary term, that's a downtrend in the minor to intermediate term. Once we see that, then there should be a concern for the buyers. And again, this market, we've seen these things happening where it looks like the market was gonna roll over. It looks like the market, put in the new lows, and it looks like we have a broken below some of the lows and has confirmed minor term uptrend, or confirmed minor term topping pattern. What I'm circling here right now, what I'm pointing out right now is that when this market created a new low, it just became opportunity for the dip buyers come in and just bring the price right back up. And that's what we've been seeing last few years here again. So, and I'm not saying that that's exactly what's going to happen, but that's what we call primary term, intermediate term uptrend. What happens is what has happened in the past, it has high probability, it likely to happen again. So it's very interesting and also important that we understand not just recent price action, but we also kind of go back and trying to ascertain what had happened before. And it's interesting to note that when I go to line chart here, and I want you to pay attention to 200 SMA, if I just draw that line right here like this, we're just right on that uptrend support. And for the longest time, we've been kind of respecting this uptrend that where the 100 SMA is hanging around. Now that we've broken below that support, with the recent decline, are we possibly creating another uptrend support here? You know what I'm saying? So, and again, we wouldn't know that until we see a bounce. If this thing bounced at that level, that will be establishment of a primary term uptrend, including this valley here, right? So then lining up here while the 100 SMA just kind of hovering in this area. So we're at that level. At the same time, if I throw a Fibonacci here real quick, you can see that, we can throw a Fibonacci in this peak using that, or I can also use this peak here for more of a primary term Fibonacci retracement. And so you can see that, let me just get rid of that one for a second, the longer, wider version Fibonacci, and just kind of move this up here. And this is more of an intermediate term Fibonacci there. So if we just look at that, we're just right on that Fibonacci retracement. This is also what we call confluence zone, right? Confluence. This is a level. There's a lot of buyers and sellers. Just did a lot of business up there. Just a lot of things happening at that in this vicinity, right? This is what I call Fibonacci retracement zone. Also confluence zone here, which that act as resistance resistance in the past and then back acted support, and we're kind of back at that level, which is a 50% retracement zone, also coinciding with that daily 200 SMA there, daily 200-day moving average at the same time. So biggest question here again, are we going to go back and retest the neckline and then roll over, or are we going to go straight up? Because again, we have to understand that we've seen these shenanigans happening where you can see that necklines here. This was a biggest question back then. This was a biggest question back in 2014 April, right? See, and can you imagine if this is today? Right, this is a today, and say, hey, we have this kind of a triple top formation. We have a lower high right about here, and then we broken those lows, broken these supports, and then now this is a neckline, and then this is gonna get up, retest the neckline, and then roll over. Right, that was a speculation without the substantiation from the price action, and then what happened was this thing just went straight up. Right, you can see that. And became a V bottom. Because a lot of times what happens is when you break some of these lows, like this, it usually goes back up to that low, which is what we call an old support becoming new resistance, and then it rolls over, thus creating another lower high and then lower low. Well, it didn't do it here neither, right? You can see that we had another V shape with another V shape here. So when we got to the neckline, the pivot, it went up and then it didn't get rejected, but it just kind of went straight up. So when we go back today's move, is it fair to say that there's a good chance that this thing can get back up? Again, it may not happen exactly the way it happened before. We may, again, like I said earlier, that we may do something like this and then create a double bottom and then do it, right? Or we can just go straight up and make another V bottom. And again, it's hard to tell at this point. But because we're dealing with this prolonged uptrend, and we're dealing with these characteristics of that, happening in the past, right? You can see that another one right here. It's hard for me to be bearish in a long term at this point. And in a minor term, I have to say, it's concerning in a minor term. When I say minor, everybody, when I say minor term, I'm talking months, okay? So, minor term is concerning. I think, and a lot of people want to ask me, like, what is a primary term? This isn't a primary term topping pattern. That's a minor term topping. But what is a primary term topping pattern? If we start seeing something like this, and cultivation of almost a year, 8 months to year, 8 months to 1 year, and we start doing this, then that's a primary term topping pattern. What I say primary term, these kind of topping pattern can crash the market. But we're dealing with this dinky little thing here. It only took about 2-3 months of cultivation. And with the recent, volatility we've seen since this whole year, this year to date, S&P 500 is only doing about 0.3% right now, so it really hasn't done anything. But with the recent move, what it does for me, what it looks like as far as like sentiment is concerned, it reminds me a lot of like 2000, 1999, and 2000. Right here. This was, when we're dealing with 2000 here, we're dealing with this kind of a long uptrend here, and I don't have enough data here. Actually, if I go to S&P 500 index itself, we were dealing with just monstrous uptrend since 1980. This was a 20 years of an uptrend. And I mean, when you look at this doesn't seem a lot. This looked like it's more like a sideways. No. When we actually go like this, we were moving pretty fast to the upside. And then it became almost parabolic here. And even then, we had another 6 years of bullish run. And again, I'm not saying that in about a year or so, I'm not saying that we're getting to the top of this market. But what I'm saying is, we've had Head and Shoulders. This is much stronger Head and Shoulders. This took about 8 months to cultivate. Let me actually look here. About 7 months to cultivate. Okay, 7 months compared to 3 months we're seeing today. And these things happen all the time. And then this continues higher. And then after that, we had another about a year and a half of bullish. I mean, it was a lot of volatility, but we continued higher. And finally, in 2000, late 2000 market did top out. So, and to me, though, it looks like we're dealing with a lot of volatility like we've seen in 1999 and 2000. Okay? And so if we look at this here, to me, that's kind of what it looks like. You know, just a lot of volatility, a lot of up and down movements. And I can't say that as of today that, you know, next year is this going to top out or anything like that. I really can't say as of today that this is where, you know, market is going to top out. I can't say that. I don't think so, because we still cultivating primary term uptrend. For primary term uptrend to, when I say primary term uptrend, these are the things that I'm saying. This is a primary term. For that to be broken, for that this kind of primary term uptrend to be cracked, we must need some kind of a primary term topping pattern, and we're nowhere near that. So what we're dealing with is some minor term topping pattern that potentially could have opportunity for the buyers to have some kind of V-shape higher. Again, I'm not calling that we're gonna have V-shape here, but I'm just realizing certain levels. Again, remember what I talked about the line chart here. It's worth a look again. I mean, I can even go further back to about 2011. It lines up better if I just draw from here to there. It lines up much better. But lining up precisely doesn't really mean anything, right? Because this market isn't going to always precisely respect these lines. But even if you go back to 2011, market is still in an uptrend. So we must respect it in a primary term. Obviously, if you're trading things very short term, and a day trader, it doesn't matter for you. But for me, as a position trader, I hold things 6 months a year. And so it is very important for me that we stay primary term uptrend. So I'm still bullish in the primary term, bullish in the intermediate term with a little bit of cautiousness. However, bearish in the minor term. Does that make sense? So I think, if I just look at this real quick here, I could just give you some price level. I think above 210.50 on Spider, 210.50. I think it's gonna resume bullish. Anything below there, I think a lot of volatility is gonna continue, and I think 205.05, 205ish must be protected for the buyers to resume in this. So we basically 210 above 210. I think bullish there. Below 205, 204, I think bearish, and in this vicinity we might see a lot of volatility. And I think I think there's going to be some activities next few days where buyers going to try and protect 205 level here on the Spider, right? So minor term, I stay bearish. Intermediate term, I would say neutral to bullish, because we're still holding the 200 SMA level here. Primary term, obviously bullish there. Let me actually look at financial sector real quick. Financial sector, we did have a steep decline, but are we faithfully cultivating higher lows and higher highs? Yes, higher low, higher highs there. So I mean, yeah, we had a pretty steep decline, but you can see this is how the financial is going to trend. It's gonna have steep decline in between, and even breaking some of those lows. But it's going to continue to cultivate higher lows and higher. As long as we continue to cultivate higher lows, higher highs, we're in an uptrend. So I think financials also minor term bearish, intermediate term bullish, primary term bullish as well. Let me look at Russell. Russell, again, if you just look at Russell, let me just go to line chart here. And if I just give you guys here, bottomed, correct? As long as they continue to faithfully cultivate higher lows and higher highs, what do we call that? An uptrend. And that's what we've been doing. It's gonna have its decline. Of course. This market is gonna go straight. It's not gonna go straight up. It's ever since here went up, came down, went up, came down, went up. Okay, I mean, that's what we call a trend. So what I'm saying is it has high probability that it came down to create a higher low and continue higher. In average 100 SMA did act as support in the past here, and this is a good level there for support. I'm telling you right now, Russell 2000 with a monstrous topping pattern all year 2014. That was not enough to crack this market. Do you think just a little decline is gonna crack Russell 2000? I don't think so. I don't think so. This is a monster. It's 1 year of cultivation. Bears have created a monster, and then once we got below 108 on the Russell IEWM, bears let go of this monster, let loose this monster to kill the buyer bulls, and then buyers just came out, completely demolished it. And then you're saying, well, this little decline. No, that's exactly what I said last time when we said a decline here. Remember, if you go back to my video, late April, early May, I said this ain't gonna crack the market. That ain't gonna crack the market. This isn't enough to crack the market. We had a 1 year of a cultivation. Well, we had a 1 year of a monster couldn't crack the market. You think this is gonna crack the market? I really don't think so. So I think Russell, obviously bearish in all these indices. They're bearish in a minor term, but obviously they're bullish, maybe neutral to bullish in the intermediate term. Obviously bullish in primary terms, so I stay bullish. And when the things are shake and bake like this, and and some of the positions are going to see some weakness, and this is where you're gonna keep the ones that are holding up well, and then let go of some of the ones that are just tanking, right? Just breaking some of the lows and breaking some of the supports, and looking weak, and start cultivating downtrend in the intermediate term. So for me, I mean, I hold multiple positions, and then when things are shake and bake, there are gonna be couple positions. It's just not gonna be able to hold on, and then I close those out and then keep the positions that are gonna hold up well. And one of the ones that, and some of the ones that we held, things were holding up well despite of the market was a Facebook, right? So Facebook, obviously, if you look at this, we're just right on that resistance, kind of a rising channel resistance here. And so, some of these, and this is example there. This is one of the positions that we own long right about here back in, about late February, and then went up, came down. We came all the way down actually, and then went right back up here. And I was really hoping that the reason why I held through this is because I was hoping it will break lower and retest this as a new support and then thrust higher. It didn't do that. It just completely kind of a roll over, but I understood that as long as we are staying in this uptrend characteristic while cultivating higher lows, it's gonna get back up, and it did get back up in about month later, and then I realized, hey, this ain't gonna have a huge move because of it has been bound by this channel resistance, and this is a very, very strong, this is a prominent, preeminent resistance because there's a lot of sellers up here, and so then we close all of our positions up here because of this. And so this is kind of what I'm saying. Even though when the market's shaking back, there are certain positions gonna do better than the others. And it's, same with Tesla there. When we look at Tesla, you can see that even with the recent weakness, Tesla did pretty well. But the thing about it is, when market was holding up, Tesla really was crashing down. And obviously, market had seen a lot of volatilities though, and it just really crashed down. And then now we're just continuing to move to the upside. I'm still not involved with Tesla. What I really like to see is intermediate term high low. These lows are not intermediate term. Those are more of a minor term high lows. What I'm looking for is kind of steep decline to create that more stable higher low, and then it cultivates that maybe left shoulder head, right shoulder, invert head and shoulder. The biggest question would be then, would you go long here or here? It depends on how it bounces there, how it gets there, also depending on where the market is at the time. Again, I'm not saying that the Tesla will pull back this much. If Tesla continues to go on like this, that's not my setup, and I will not be involved. I do not chase a trade. And so that's the discipline part that is, if I don't see my setup, I do not participate, regardless how well it's been doing. And if Tesla keep going, continues to move higher, then I just let it go. It's not mine. I let it go. But if he pull in the event that he pulls back to maybe 100 SMA, because 100 SMA did act as resistance here in the past, and 100 SMA was pretty strong support in the past, and the 200 SMA here. It was a crucial level when he pulled back. It was a 200 SMA, and the 100 SMA was a crucial level to buy into for next strength. So even if he pulls back to 100, 200 SMA, that could be certain levels possibly looking into getting into for next position trading there. So Tesla looking great though. However, I haven't been involved in it. I'm still waiting for a pullback. And again, I'm not saying it's gonna happen, but if it does, I'll be waiting to possibly get in. If not, I'm just gonna let that go. But looks like we did clear some of this resistance here. But just because we clear this resistance, this is not the level I recommend. I think it's a good level to buy, because think about where it came from. It came from here late March, and we had this kind of phenomenal move for about 2 months. And if you just understand the characteristics of Tesla, I mean, you get some good move for 2 months or so, but sooner or later, it's gonna have pullback. And in my opinion, rather than going long here or here or here, right? Rather than going long here, I rather go long here, down here somewhere, down here somewhere, down here somewhere. After pullback, right? So Tesla, I continue to watch, but I wouldn't be interested until I see a steeper pullback. Again, doesn't mean that it's gonna happen. It can very well just keep going higher. If that's the case, I will not be chasing it. I'll end the video with this, with Apple here. Apple, I'm still long on the Apple. Briefly, we closed below that resistance right here. You can see that we had our support. We had that support. We briefly got below that, but you know what? This market loves to play games. And that's what this market loves to do. This is kind of what this market do. This market did stuff like that in the past, where we get briefly below that support level. We did it here again. You can see that this is support. Many people get trapped here. They get stopped out. People start short selling. People start buying some puts, and then this market just goes straight up. And this doesn't just happen just on Apple. It's been happening in the over market. Same thing happened here. This is a resistance of this was back in 2014 March. You can see that this was support, and it traps you there, and then it just goes right back up. So obviously, we gotten slightly below the lows, and we, you can say that we find support here. And I'm not saying that we don't have a V shape. I'm not saying that, but this isn't just because we got below the low. That's not the level that I'm gonna start to freak out on it. And, if anything, this more look like it's starting to look more and more of a channeling action. This does not look like a topping pattern to me. This looks more of a channel. Channel is a constructive price action from the buyers, and then before going higher, it's more of an accumulation phase. A lot of times what the bears want to see, bears do not want to see a channeling action. Bears just want to see this thing crashing down. So a lot of times channeling action here, if I go back, is a good for Apple, because even if I go back to 2010 May, you can see that the channel action right here. It's a channeling action here. This is another channeling action. Oh, how Apple loves to play games with the bears. We gotten below the lows. This is where people get trapped. People get stopped out. People are short selling. People are buying puts. And then this goes straight up. This is what I'm saying. Just because it gets slightly below the lows doesn't mean that's a level to sell. But these consolidation period it's always been kind of helpful for Apple. You can see that there's a consolidation, and this was after decline. Consolidation is helpful. After a move, consolidation is helpful. Another move, consolidation is helpful. Another move, consolidation is helpful with the traps and shenanigans. And then another bullish move right here. Ugly, but consolidation. Another trap right here. And then continues on. So why so much traps? Why so much shenanigans? Well, because many people are not respecting the primary term uptrend. They're so inclined. As soon as we get below the lows, they want to short sell. They want to buy puts, and that's how this market isn't going to work. I mean, it works. at times, but it doesn't always work. Obviously, we're still in a primary term uptrend. You can see that we're a primary term uptrend. Intermediate term, though, we're a bit neutral to bullish because we're consolidating. So again, like I just gave you a demonstration, this is a consolidation pattern. It's gonna favor the buyers unless this market crash. I don't think it's gonna happen anytime soon, though. I think the Apple is going to, after when it's done consolidating, we might see some shenanigan where it get a little bit of trap here, something like that, before it thrusting higher. But at this point, from minor term perspective, though, minor term forecast, still bearish in the minor term. We got lower highs and lower lows in the minor term. We really want to see this thing getting above 129, 130. If we can get above 129, 130, possibly we'll gap back up to about 134, and then we might even fall back and then continue in this channeling action, or we just go straight up and start cultivating uptrend. And we wouldn't know that, though. At this point, I would have to see the price action when we get there. So look at Apple and other things in my midweek update videos, and then we'll go from there. So hopefully some of these insights can be some of it helpful to you. If you have any questions, please feel free to use my blog to write any comments or questions. I would appreciate that. If you have any questions, you're always welcome to email me on my Traders Club. You can just go to my website. There's a contact us. You can do that as well. So have a great evening. Let's see if the market can possibly see some kind of a bullish move here. Again, 210 is a level that I'm going to be watching. If we can get above 210, hold above it for several days, I believe the market can sustain and this bullish option and continue higher. This is the level. Above 210 is a level where the repudiation nullification process will start, nullifying this potential minor term topping pattern there. Anything below 205 is a level to start to concern. And that's when things can get ugly. And then so we're at the important level here. This is gonna be important level. We may see a lot of volatility there, so be prepared for that. Again, looking at the line chart here, this might be level of a support coinciding with that 200 SMA on the daily chart there. But again, I cannot substantiate that. It's not a well-established uptrend. It will be established once we see price action getting above 213. Once we see that, this will be a strong established uptrend. As of today, it's tough to say it's gonna be. It's a potential level of support, but it's not established uptrend support. Have a great night. We'll talk to you guys next time. I'll talk to you guys next time.